me out to the ball game. Take me out to... All right. It's game on. Get carried away sometimes. But again, it's the more the trend is advancing in our direction, the more the precious metal complex advances. That's when we have to focus not on how it started, because we've done the homework before. We've seen those important breakout lines, breakout for gold, 1350, silver, starting to stay above 17, 18, moving up. And for the rest of the complex, that's pretty much a check done. Now, we're still at the early stages, but we got to keep an eye now on the greed. How far can we go away? How far? I know some people look at I think BG, GDM there. It's a ticker on stock charts. I don't have it on TradingView, but it measures the point and figure breakouts. And then after that, it does like an index. And then people say it's a sentiment on the gold miners, but actually it's P&F charts that are breaking out. And I think the logic is, if all the gold miners are breaking out P&F charts, then there's no more left to break out. Hence, the only direction you could go down eventually. That's one within a whole bunch of other charts you should look out to see if you're stretched, right? At the end of the day, you look at your chart yourself. Did you reach your measured move, etc.? Then the distance from the moving average is a great way also to know if historically you're stretched to extreme levels, which have a low probability of repeating or staying at those stretch levels. And then after that, you could look at ratios and see how far they're stretched, where they're going to hit resistance or support. And then when they all start hitting support at the same time, you could say, oh, okay, I'm done. It's going to be an important correction coming up. So I just want to come to this chart there. I did some, when SILJ outperforming SIL, outperforming GDXJ, which outperforms JDX, which outperforms gold, which outperforms silver, or silver that outperforms gold, then you know that it's full throttle across the board for the precious metals complex. And then I decided, okay, let's compare silver juniors. So the silver seniors divided by the silver juniors. And I want to see that ratio go down. This is like a risk on. This is a pretty much equivalent of a VIX going down, of a gold to silver ratio going down, a DXY going down, right? Anything denominated in US dollars, if the DXY goes down, then those assets are going to get a boost in nominal value. And look at that. After the March peak where silver miners, seniors outperformed the juniors, it's been downhill. Right here, I could have drawn another trend line right here. That ratio breaking down, waterfall, going back up, beautifully hitting that 50-day declining moving average. And now we're right on the brink of an important trend line for another hit down, just like we had in July of 2019. Look at that here. It broke down. We're right there. We have that 200-day moving average. We're right on it. What else? That 200-day moving average, the VIX is right on it, I believe, right now. So all this confluence area, this important part, they're all happening at the same time. There's a synergy happening. And this is very important for this to break down. Volume profiling also showing that you have a potential. Look at that, a vacuum going down. A little volume node here where you could get a small resistance, small support, maybe a little pullback, and then all the way down that volume defined slide right there. This is just beginning. Somebody who's really embryonic would have probably got in here right off those mid-May, really when the SILJ started exploding versus the SIL. But right now we have another important juncture right here, guys. So this is the ultimate risk on environment. Until we start hitting probably this ratio down here, 2020, then we had an important pullback in the juniors. So that means a slowdown in the whole complex, right? Because the silver juniors are going to be the first ones really stopping their advance, just as they're the last ones to get in, but they have a lot more gains. When we start hitting that support down here, that's probably a good area. I'm going to say, oh, okay, we might be in for a big bounce going up. each of these volume nodes actually is probably an area where we could expect a bounce back until we hit very important support that's a lot lower down. So this is a fuel. I see fuel for the nice important rally, and right here we're just on the brink. So people say, oh, I'm going to take profits here. Well, give yourself a chance, because right now, until you hit that first volume node here, it's a vacuum where SILJ should be outperforming the rest of the sector, guys. Okay, so let's head over to the VIX. The VIX is right now at, I think, 25.7. So this chart I did on July 16, and right there we were at that 200-day moving average, the 50-day moving average, starting to push down on it. Bearish MACD wire cross, and I identified those as huge silver buying signals, but it's anything risk on, right? Even the US equities went up as the VIX deflated, and silver being part monetary metal and part commodity, inflation sensitive commodity, then it gets that boost on that way down as equities go up, risk on goes up, inflows of capital, silver gets a nice boost there. In this chart, like, I started going down that rabbit hole of gaps, and gaps need to get filled and all that, but there's really a violent gap right here, and this one is really my target for the VIX. And if I base this on gap filling analysis, I'd say I want to see that gap filled before giving up on this current rally. So I think we're going to keep deflating the VIX, and like I said, now we're below that moving average, where we closed the week at 25.9, 25.7. We had a minus 8%. I think on Friday the VIX went down, so we're closed below that 200-day moving average, closing below that important support, now becoming resistance. And I think we're going to really liquidate down all the way back down to 18.2. And remember, this is a log chart, so if I'd had this on linear chart, this would be really spiked high. So there's still quite a move we can make to go all the way down here. VIX going down, that means DXY going down, GSR going down, silver going up, and silver miners even going up even more. It's just, and we just crossed, just bounced back close to the zero line on MACD. It's starting to go back down right here. The wires did not do a bullish cross. They're starting to go back down. So that's the second leg down I believe we're going to have before really exhausting, before heading into a little mini blow off top where we need a multi-month correction. We need to get that extreme, right? We need to get that huge candle down, or we don't need it, but I'm expecting we're going to at least try to go and hit this level right here before bouncing up. Because this, if I would have drawn the trend line here, there's also an important previous resistance now turned support. So there's a good chance we bounce back up here. That's what I'm aiming. Where's SILJ going to be at that point? Where's silver going to be at that point? We're going to have to keep an eye on that. But right now, that's more fuel I see in the gas tank before taking important profits off the table. Some more important conjecture. The Russell, when the Russell goes up, it's really the risk on, right? Those small caps is the equivalent of silver versus gold. This is the equivalent for the US equities of small caps versus big caps, right? If the Russell is able to get out of this huge pattern right here and try to make it above at least this trend line, right now it's trying to fight again another chart where the 200-day moving average is being battled. And the metrics are looking pretty good that it's going to try at least to get above that. That is risk on. I don't know if it's going to make it to all-time highs. If it stalls, that could also coincide with the VIX hitting that 18. It could also coincide with the silver stocks also hitting a correction period. And look how much it's stretched here. So I see there's a lot of room for Russell to go up, to really get stretched, really go in a fear of missing out mode, where people aren't thinking straight, where all that money's flowing in. This is fuel. So if I'd be a guy playing US equities and I want to play the Russell, I'd probably put my sell stop, or I'd look at the chart, and as soon I'm stretched above 18%, above that 50-day moving average, I say, oh, okay, that's it. I'm going to probably need a sideways move or correction. But look at that. That's a lot of room we could go up right here. So that's another, for me, another indicator that we have some fuel left for the precious metals, especially those silver miners. Look, there's just so many charts I'm trying to look at, and when you take a step back, you see that you really at the beginning. This is the monthly chart for the Fed. Has this. I don't know exactly how they calculate it, but it's their deflation probabilities. So you could go on the follow this link. It's the chances of having a deflation. So I think that's negative growth, not disinflation where we have less and less inflation, but actually negative growth going forward 1 year, or for the yearly rate to be negative 12 months in the future. We had these type of events in the GFC where it just spiked up. As it spiked up, that was the bottom for gold and silver. And most likely because this is around the area where the Fed started to do QE or easing, where they took an action to actually stop those probabilities of deflation. They kept spiking, but gold and silver already smelling really away. They were smelling those monetary imbalances coming in, the eventual inflation, or those real yields that were about to stagnate or go down. Same thing happened in April. As soon as that spiked up, scaring everybody, deflation, no, don't want that. What happened? Silver bottom, gold bottom from a higher up, but still bottom from that March Madness, and just been going up since then. Deflation probabilities going down. The market's believing, or the Fed's calculation, that they're doing enough to keep it on the wraps, and they actually seem to have done a better job than they did back in the GFC, where it took a while for those probabilities to really go down. Either they did enough or they did more than enough. So we're going to see that through silver and gold prices accelerating. This is just another, add that to the weight of evidence that the fuel has been unleashed. That's going to create gold, silver rises, and probably even US equities in the nominal value, right? But you got to remember, nominal values going up, it just tells you half the story. But if you measure in something other than DXY, other than US dollar or fiat currency, if you're measuring gold and silver, then you see the true performing assets, the hard assets, gold outperforming those US equities, silver doing the same thing, and as most other commodities will do in the future, guys. And one more chart. What about that famous gold to silver ratio? With volume profiling, it's clear. Even a good classical charting guy, any technical analyst guy, going to tell you we close below its 200-day moving average, so leading the VIX. So I'm expecting the VIX to follow in the GSR ratio. I'm expecting the Russell to stay above its 200-day moving average. I'm expecting silver juniors to outperform the rest of the complex. Declining 50-day moving average, we're going to do a bearish cross right here really soon. Look at that volume profiling, how much it would have helped you. Right here, as soon as we were under that peak, that 96.67 peak, we vacuum all the way down, and look, it stalled right here when it hit that other volume node right here. Went back up, but you see that wick, that pressure sucking that price down. Oh, I'm getting scared. Hitting that 200-day moving average, getting close. That 200-day moving average now is not support anymore. It's resistance. It's going to start bending downwards. And look at that. Vacuum all the way down. So until I hit that 88 target, where we have the next important volume defined resistance, until the gap is closed on that 18 on the VIX, that's fuel. It just let the market deflate, let it absorb whatever the Fed did as monetary imbalances, or you got to let it play out right now. There's no signs that we're really going to have a spike up. There's no resistance, no support right here. Look at that. As fast as you went up, as fast as you're going to go down when you deflate. Same thing happened here. After you did that top formation, lower highs, okay, then crumble down. Look how fast it went down. And it blocks exactly the same areas where it blocked on the way up. That's where it has a chance of blocking on the way down. So look at that. That's a vacuum right here. And we know that when the GSR goes down, Silver has a high correlation with that, especially in the precious metals bull complex, bull era, that its gains are going to be positive. So right now we're not there yet. Gotta let it run a little bit more time, and then once we start getting closer to those levels, we could start expecting a pullback up, and then that could be a good area. But until then, I think we're in a sweet spot, and this should keep sliding over the next couple of weeks there all the way down here. All right, guys. See ya later. Ciao.